Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Welcome to today's webinar. It's the first webinar for this month, ladies and gentlemen. What I've selected for this month for you is a series of 6 individual webinars where, of course, we will have our attention towards news trading, and most of all, we will actually break down into 5 major currency pairs with commodities as a selective majors. And of course, in today's session, we will just introduce what will be in the sessions to follow. Also, we will have a look at a few pretty good strategies, I might say, for suitable for news trading. However, one in particular we will mostly discuss, as it's been proven to be much better to to establish into your own trading plan, as long as you're trading the news that are actually scheduled. So, speaking of scheduled news, we will focus on fundamental factors behind major currencies and commodities. So what I mean is that every Forex trader, ladies and gentlemen, that trades currencies or commodities is influenced by a range of internal macroeconomic conditions in the country of origin of this particular currency, as well as by the global market situation as well. A few examples are the economic indicators such as the GDP growth, import-export trade accounts, social factors like unemployment rate, real estate market conditions, so on and so forth. And of course, the country's central bank policy, which is a huge factor that determines the currency value in the foreign exchange market. Each one of all of these selective pairs and commodities that we will talk about this month has its particularities, and of course we are going to analyze and systematically assess which fundamental factors are influencing more for any currency exchange rate to suddenly rise or fall. Now, it is well known, especially among traders with an experience that led them to suffer some kind of losses, that they've been caught off guard by some big movement on their charts. That, of course, does not seem to be the result of any chart pattern or any other obvious reason. So, in this month's presentation webinars, we will of course stay on top of this situation, and of course I will show you which events to follow by my own opinion, of course, on the economic calendar, which you can consider one of your most powerful tools in trading. As I mentioned at the beginning, there are 5 selective pairs and commodities. So those will be, as of course one of the most traded currency pairs is the euro versus the dollar. It will follow up with the cable or the GBP versus the US dollar. Also, we will have a look at some safe haven yen, the dollar versus the yen, and of course major commodities such as gold and oil. Those I've selected specifically as not only because those are the pairs and commodities that I usually focus on our daily briefs at the firm, or the daily recommendations that we're sending to our clients, but basically because those 5 individual instruments are mostly preferred among traders, and of course they are usually with high volatility. Well, 2 among of those 5 are distinguished with higher volatility than any other, of course. Speaking of the cable, also gold, of course. First of all, what I will mostly focus on is just as a guideline, I will mention a few strategies, and at the end we will focus on one in particular. Trading strategies which you can use for trading the news is, of course, one which is mostly used by traders from a technical standpoint, is of course the momentum trading. So we have had a presentation, a webinar especially for the momentum trading, which involves identifying times when prices are being pushed in one direction by high volume of trades, and then of course profiting from the price movement with the short-term trade. Or if you are looking on a weekly basis on the 4-hour chart, so you can get a direction from the beginning of the week until the end of the week, or at least the first 3-4 sessions. This is also quite suitable for, let's say, traders that don't really like to stress that much on the market. So they prefer to have 1 to maximum of 3 trades per month, and of course bringing profits to their accounts from all of these trades. The momentum trading is extremely suitable for people that have different job. They're not mostly focused on trading day-to-day basis, but of course they have a little bit of time, so they can open the chart, check out the market and its pricing, and of course how high the volume is. In news trading, ladies and gentlemen, price momentum often becomes strong at some point, of course, after news has been released. But what we've seen is that particular movement is crashed out or retraced in the next 15 to 30 minutes. So this is also a strategy that it's called type of movement trading. Okay, this involves profiting from the initial movement of the price straight after the news announcement is made. However, this could be a little bit tricky, and let's say it carries significantly higher risk than any other strategy that is involved in today's session. It actually carries also high profit potential. So, as an example, let's say non-farm payrolls, CPIs, like the retail sales that we're about to see in about 20 minutes. I hope I'll be able to open the economic calendar so we can follow up on the news and see the market reaction along with that. So unlike the momentum trading, we are actually trying to exit our position in the next 3 to 4 to 5 minutes from the initial opening. So it's a type of scalper strategy. However, this movement trading, ladies and gentlemen, does not usually continues, let's say, more than 15 minutes. The second 15 minutes time frame after the news release, the market starts to digest the information that it's just received. So you can expect a bit of a flat market for about 15-minute time. this is where the so-called intra-candle appears. This is the perfect moment where you can use our strategy, if you find the webinar from the past months, where we've been talking about a bit more advanced news trading strategy from a technical perspective with market pricing. If those that are here remember about the strategy, it's quite useful for this particular type of trading. So you can combine the movement trading with market pricing and have a very powerful strategy at hand, especially when we have high volatility news with let's say you're trading the euro-dollar imminent movement with about 100 pips and more than 60%, 60, 66%, let's say, a retracement in the next 15 minutes. So for those that have, let's say, a bit of a problem, with the nerves right after the release of this news, you can always wait 15 minutes after the release. And of course, the news will be digested, and then you will have your chance to trade again within the direction of the news release. More importantly, a bit more conservative type of strategy that I've mentioned that we will actually in details have a look at today will be the breakout type of strategy, or the so-called support and resistance. It have a different name depending on who is actually modifying the type of strategy. So basically, the breakout trading works when price breaks out of technically important range. It is extremely easy to understand and to explain why exactly it's called that way. Of course, one very important thing to remember here, that traders following this particular strategy are profiting from a big sudden movement when a news announcement causes price to, let's say, spike up or down, break important levels, and start establishing new support or resistance levels, of course. Now, why am I choosing this way to trade the news? Well, first, you can only speculate what number you're going to get. You will never be sure on a 100% what kind of news you will get. So if you're just looking for a quick profit for about 15 to 30 minutes with a range about 100 to 200 pips of profit, let's say, this particular strategy is quite good. Of course, it has 3 stages, like the way it has to be established. Now we will move to the chart so we can have a look at how to actually place those levels, to also set up your pending orders. Most of you already know how to do that, but the initial understanding is much more important, because when a trader sets a few levels above a current price and a few levels below a current price with let's say 50 pips difference on the first levels and set a pending order, it's much better and much more relaxed way to trade when the news is released, because the price action just breaks off this particular level, triggers your position, and hits your take profit level as well. So what we need to do is to have our platform opened on the 30-minute chart. It's what you see in front of you. I've chose 4 different instruments here, those which we will actually take a look at in the following sessions. I've spared one just so we can see, the charts in a good view, in a big window. It can be easier for you to understand it. Usually, the pairs that we select, let's say, are connected to the US dollar. So why is that? Because usually the news that are released with high importance are with major impact over the US dollar. So it doesn't matter if you're waiting news from Europe. Of course, it will strengthen the euro versus the dollar. It still impacts the pair. Or if you're trading in the US session and you're waiting, let's say, retail sales in about 13 minutes, that also affects the dollar. And of course, those are the majors with tighter spreads, of course, higher liquidity, so on and so forth. The important thing is always to have our charts on 30 minutes before our news release. We need to identify 3 support and 3 resistance levels, which of course should be above and below the price. Above should be the resistance, below should be the support levels. It's extremely easy actually to find and to identify those support and resistance levels. You don't need any kind of, let's say, Fibonacci retracements or any special skills to actually determine that the price has actually had a difficulty here to continue moving south. Also, we can identify south from our current price that this is a good support resistance support level here, and this also. Now, as we can see that the price is in an uptrend on the 30-minute chart, that means we need to switch to a higher time frame so we can see some resistance levels. On the daily chart, we can see over here that we have a very good resistance level. If we just shrink a little bit so we can see something better here, we can see a good level here. You can see this one. And of course, one over here. And those are your levels. Now, continuing its movement, the price action might just swing below the support or above the resistance of the first or even the second levels, which of course is the second step for our strategy. Minutes before the release of this news, the piece of information that you're waiting for the whole day, you need to remove those support and those resistance levels that are closer than 50 pips or has been crossed by the price action. So we can see that this particular support level here is at a distance at about 15 pips, which means each one we should definitely remove. This one is 30 pips. What we're left is with one major support level and with a few major resistance levels to the upside. This is where we should set up our pending orders, and that should actually happen 5-6 minutes. If you can do that fast, it's much better, because the market starts pricing prior to the news. And also, we should definitely set up stop loss and take profit on those orders once they've been triggered. Stop loss is usually appropriate at around 25 pips. Let's say take profit at 50 pips, which makes a 2-to-1 risk-reward ratio. And of course, extremely important thing to remember here is to set up an expiry time, which should be with about an hour and a half, or if you are a bit more risky, maybe you can leave it for about 2 hours, because once the numbers are announced, if of course, let's say they're good for the euro, all right, the pair will start moving higher. That means the pending orders down here should definitely be removed, because once your orders, your take profits, for example, are hit, then the price might retrace or even reverse direction in about some time. In about an hour or 2 hours, let's say, you might have another announcement from the Eurozone, maybe, probably, let's say Mario Draghi will have a speech. It's when he has something to say, it's usually bearish for the euro. So it is extremely important to have these expired, a few hours expiry time. Even if you forget to delete these pending orders, then you know that at some point of time they will just be deleted. It cannot get as easy as this. And of course, this you can do for all charts, even if you want more than 4 charts, for example. One important thing about this particular system is if you have more than one chart with pending orders, always keep an eye on your pending orders, and always set at least 1 to 2 hours expiry time for your pending orders, unless you're always in front of your chart, and you will eventually just delete them once the right direction has been caught. Speaking of which, the right direction, something that I have to say in a few sessions actually, but I want you to monitor today, strictly speaking about the commodities, gold in particular. For those that are interested in trading gold, it is extremely important for you guys, because right now what we have is a delay in interest rate hike from the US Federal Reserve. Also, whatever numbers that might come out, regardless of whether they're good for US or bad for US, we are expecting gold to edge higher. However, there isn't a level of 1186, that's $1,186 an ounce. This is a level where we're expecting the precious metal to enter, a sell area, the so-called area where we can expect a lot of short positions to start building. Not only because it's a very sensitive sideways direction for a long time, but if the pattern confirms, we can see another $100 downside on gold for the next couple of months, maybe even more. So I'm talking about Gartley pattern. For those that have been here in our previous webinars, speaking of the daily chart on gold, as you can see, measuring from here to here and here, somewhere around this level over here, we will have the same direction from here, which is about $86, and from here, which is about $86, you see, it's exactly here, 1186. So from here we can expect reverse to the downside of this Gartley pattern. Of course, this is just a technical pattern. It has a certain percentage of chance to invalidate and keep going to the upside. Still, this is one of the most powerful patterns out there, so we're quite confident that it's quite good opportunity for long-term profit. Speaking of long-term, months to come, and also a hint, it doesn't matter how long the Federal Reserve delays this interest rate hike. It will eventually happen, and of course it will eventually be bearish for gold. Of course not for the long term, as we know that the yellow metal is hedged against inflation. So once the Federal Reserve have completed their job by bringing inflation above their 2%, we better start investing in gold. That's all about the session today, ladies and gentlemen. Thank you very much for joining us. Now, the next time, what we will talk about is strictly for the euro versus the dollar. I have selected a number of individual economic indicators that you can always have it at your back pocket. When you need it, you will know in combination that it is a very powerful tool to trade the currency pair. Most of all, there are actually three individual very important announcements or inflationary indicators, you might say, as well, which you can actually easily suggest what would be the next direction for the currency pair. And it will, of course, be the same for the next sessions when we will have a chance to talk about the cable, one of the most volatile currency pairs, extremely unpredictable, of course. However, until next time, don't forget to sign in if you have not done that so far. This session is also recorded for those that are interested in reviewing it one more time. For those that have difficulties in finding our other new strategies, except this one today, we can always send you the link to our YouTube channel to review the webinars one more time, or you can have one-on-one session with me so we can have a look at it together on the computer and explain everything in details one more time. Thank you very much for joining us. I'll see you next time. Bye-bye.